there. Little something for all of you guys. Reminder, this is an educational room. I'm about to start up the classroom. Hey, what's going on, everybody? Good morning. How the heck are you? Can you guys hear me all right? We good? Coming in stereo, phonic, high fidelity? I hope so. I hope so. I'm inspired today. I'm inspired every day. I have a pretty good life. Guys, this is an educational room. Ninja Master, you're early. I am early. I figured I could flap my gums a little bit before we get into the lessons. I don't know if you guys know this. I wake up thinking about ways to help you become a better trader. Um, when I was in the restaurant business, I woke up thinking of ways to make my restaurant better. It's just how my brain works. It doesn't shut off very often. Um, but let's start with, guys, this is an educational room. This room isn't designed to be a trade calling room. This room isn't designed to tell you when to enter, when to exit, but what this room will do is it'll give you the ability to make good decisions, guys. To be able to look at a chart and to say to yourself without hesitation, man, what I'm looking at right now is a setup, is a pattern that I have proven through my study wins more than it loses. Um, Now, the challenge is many of you won't put the study in to prove that your pattern wins more than it loses. And as such, you will find yourself chasing everything. It's a difficult way to do what we do well. So as we go through today, guys, you're going to hear me talk about simplicity a lot. I'm going to do my best to not get all preachy. That's not what I want to do. I want to give you the tools you need, and honestly, I want to rein you in a little bit. I want you to relax, to take a deep breath, to realize that if you haven't been trading for 20 years, you are a baby in this arena. You are an infant, and there's a lot of successful traders that are still in their infancies. But if you're not a successful trader yet, let's talk a lot about what gets people there. We're going to start with news. Today was kind of a sad news day. At 8:15, there was U.S. ADP non-farm employment change. High impact. This is a news release that could make the market spike, reverse, jump, bump. And what it does is it removes, anytime there's a high impact news, it removes the stability from the markets. Now, in Nexgen Pro Trader funding, it is explicitly told you may not trade during red news, because if you are in the funding company, there is a good chance, if you are an exceptional trader, we are copying your trades. So in an effort to protect the company's capital, there is absolutely no trading into red flag news. I think 6 accounts were lost this morning, violating that rule. So guys, this isn't just a rule for the funding company. This is kind of what I live by. If I see high impact news, I know that it can disrupt my patterns. And because of that knowledge, I choose not to trade. You'll have to make your own decisions. At 10 a.m., we have ISM Services and Jolt's job opening. Once again, these are events that could disrupt the market, make it too fast to trade, change directions. Is what it for the day? The 10 a.m. Tesla? And then 10:30 a.m. crude oil. No, it's a minute before and a minute after. That's it. That's it. If there's 8:15 news, at 8:14 you better not be in a position. And don't get into one until 8:16. It's not shutting anybody down for the day. It's just saying, hey, let's sidestep that emotional reaction. I like to call it the freight train of emotion. So at 10 a.m., we've got that high impact again, right? This is Eastern time zone, Caleb. That's where I'm at. There is a filter. Here, let me get you guys the link first. What time zone are you in, Caleb? I've always just done the math. This is the first week I've been in the Eastern time zone. So I've always been Central. So I've always just subtracted an hour, but I do run my computer in Eastern time zone. So what you can do is right here, 8:48 a.m. You can put it in whatever time zone you need it to be to make sure that you can do the math. I've got a buddy in Spokane. He keeps it in Pacific so that he doesn't confuse himself with the numbers. Under filters, guys, you can get rid of everything but the US. We happen to be in America. So use the filters, get the time zone, but guys, pay attention to that news. It can mess things up. I've seen 100-point spikes in a matter of seconds during the news. And I think someone said in Trader's chat this morning, you got a 50-50 chance. Well, I don't like 50-50 chances. I like my odds to be a little bit better. So that is my first stop every morning, is checking out the news. We're going to talk about TradingView today. We're also going to talk about NinjaTrader today. So know which platform you're on, because the rules and the indicators, while very, very similar, there are some subtle differences that are exclusive to the platform you're on. I always start the classroom with NinjaTrader just because I'm a creature of habit. So if you are on NinjaTrader, the first 30 minutes or so belongs to you. If you are on TradingView, go get a cup of coffee if you want, but wait a second before you go. I do want to go over this picture, and I show it every day. And I know that I've got some people that are on maybe day 2. So you're going to recognize today that the language is the same, that the rules are the same, that the presentation is the same, that the goal of the presentation is the same. I'm a big believer in recognition through repetition. By seeing, by saying, by doing the same thing repetitively, what happens is it begins to stick, and the process begins to become easier. So learn to read your charts is the ultimate goal, whether you are on NinjaTrader or whether you are on TradingView. Using a checklist with 3 rules and 2 charts, regardless of which platform you're on. And you're going to build a foundation that allows you to read your indicators to recognize advantages. Let me get that for you, Paul. So from Forex Factory, there's a little green, it looks like a golf tee right there. And that'll let you set it up. Here. What is it? Give a fish, teach to fish. There you go. So I'm going to give you the fish, and now we're teaching you to fish. Advantages become your trade. I wish I could say this in a louder voice. Advantages become your trade. Trading is about probabilities. Probabilities require that whichever side of the coin you're on is the side that has an edge, an advantage, something that is testable, that is repeatable, that you can prove wins more than it loses. That's exactly what we're going to learn in this first hour. Chart reading, waiting for those advantages, is about 90% of your day. Active trading, only about 10%. And most of you in this room would say that 90% is a low estimate. Most of you in the room would say, Mark, it's more like 98, but when you get good at it, it's worth it. You're going to understand through your reading where the market is likely to continue. That'll become a way to enter the market, where it can continue with an already established trend that's easy to identify. You'll understand where the market is likely to go, using key areas on your larger charts to say, hey, with the advantages in play, that's a great destination. You'll use that for management. And then you'll also understand where the market is likely to stop. And this is what we call a termination condition. Termination conditions are areas on a big chart that don't sneak up on you. They've been there for a long time, and they are lines where decisions are made by the people that are in charge of the market. They are literally spots that could end a trend. And where the market is likely to stop is probably what's going to keep you in that 90% more often than not. Now, I added this picture to the PowerPoint because this is what the market does. And if you've ever watched the market, you've always heard sell high and buy low. Nexgen helps you recognize where those points are. The market goes up and the market goes down. There's only three things to do when you're a day trader. You can buy the market when it's going up, you can sell the market when it's going down, or you can wait when there just isn't anything to do. And we're going to learn all three of those. When a trend is established, there's almost always a small fight against that trend. The trend trade methodology that we're going to learn both on NinjaTrader and TradingView is going to pinpoint where the fight against the underlying trend is most likely to be lost by the people creating that fight. And if you teach yourself and learn and develop the patience to wait for that fight, you'll be able to take the trade that can be proven to win more than it loses. That's the edge. And learn the easy trades, and you'll see more. Learn the basic high probability trend trade that we're about to cover. Learn those trigger line and Fibonacci rules, and it'll open the door to everything else that you want to do with the software. So this is kind of how to get to where you want to be, the step-by-step path to becoming a confident trader. This picture is about 20 years old, I think. And it begins with learn the rules. That's it. And I promised you 3 rules, 2 charts. We're going to keep it easy. Practice your rules. Practice taking trades. Get on simulator. Learn the patterns. Practice the patterns. Be specific, trying to follow the rules. And then most importantly, post those pictures in the room. So if you're new in my room, most of you have Snagit, I've found. Those of you that don't have Snagit, you may have Snipping Tool. It's the free Microsoft tool to share your charts. Doesn't matter to me which one you have, but I want you to post a picture in the room. If you have never posted a picture in my room, I would love to see one right now. And maybe you're like, well, Mark, I don't know what to post. I don't have a trade for you. Guys, that's okay. This is where I'm a little selfish. If you don't have a trade to post, but you still want to post that picture, I want you to post a picture of your dog in the room. I want you to take a picture of your dog, take a picture of your cat, take a picture of whatever makes you happy, and just drop it in the room and write test underneath it. Let me know you can do it. If you can't do it, I want you to ask for help. We will walk through it together because our conversations that we'll have via your pictures are like a private session. And when you post in the room, we're going to talk about everything good. We're going to point out the challenges and we're going to find fixes. And if you don't post in the room, you are circumventing the best part of the Nexgen education. The next thing is keep it simple. Excuse me just one second, guys. All right, we're back. Hey, Gino, Happy New Year. Guys, keep it simple. Keep it easy. Keep it focused. There are a bajillion, and that's a legitimate number. There are a bajillion ways to make money with this software when you learn how to read your indicators. Until you've learned the very basic ways, it's going to be difficult to see the rest of them. So I give you these plans, and I'm going to do it right now. I'm going to give you what's called the KISS plans. And the KISS plans are designed to be a stepping stone in your learning journey. The KISS plans are not the only way to use the software. The KISS plans are the highest probability way to use the software as a brand new user because it's focused on teaching you to read the indicators so you can make good decisions. The trades in the plan are designed to optimize your chances of success. You will craft a plan tailored to your personal goals based on your experience reading the indicators. So I put one for the for NinjaTrader. I also put one in there for TradingView, and it looks like I missed one of them. And then what I've also done is I have just dropped in the room spreadsheets for both platforms. The Nexgen, what's it called? Nexgen tracking sheet. Guys, this is outlining the rules that you're going to be learning, letting you know exactly what they look like, letting you know exactly what it looks like when they're not being met. Around 500 pictures of Nexgen users trading the pattern that I'm about to teach So repetition creates recognition. Start clicking on links. Look at these pictures. Learn that pattern. There's a place for you to put your pictures as you study, and there's also a trade tracking sheet. And guys, both of these spreadsheets have that for you. For TradingView, it's got your trend trade, your momentum trade, ideas on management, termination conditions, a place for your pictures, and a tracking sheet. Now, tracking your progress is the second step in becoming a confident trader ASAP. And when you track your progress, if you've posted it in the room, not only are you going to have your annotations describing what you saw, but you're also going to have the opportunity to take the feedback that you received in the room and put it on that spreadsheet as well. If you go through this each and every morning, I want you to budget 5 minutes of your life before you start chasing money. Go look at what you did yesterday and ask yourself, what worked? Because the things that work today are probably going to work tomorrow if you're following rules, if you have that edge, because the market is cyclical. The market does the same thing all the time. But it's important that you ask yourself what didn't work. When you lose trades, don't brush them under the rug. Don't hide them from the room, guys. Learn how to fix them, and you're going to see what didn't work. I traded into termination conditions like I was getting a check to do it. That was my thing. I needed the coaching from the room, and more importantly, I needed a plan from John Novak on how to avoid these challenges, and ultimately, I was able to overcome it. Your thing will be the thing that holds you back, and you'll find that when you're trading your thing, your trades feel forced, nervous when you're breaking rules. You'll be very relaxed when the rules are met. So keep it simple, keep it focused, and I'm going to do this because I made these pictures this morning because I'm looking over charts this morning, and people are like, oh, I'm taking the HVA white bar trade, and you're butchering it. I'm taking this counter trend trade, and you're butchering it. I have this indicator on my chart because I saw John Novak with that indicator on his chart, and you're butchering it, and you're trying to make it more complex and keep up with the Joneses. Guys, this is Hamilton, and he's one of the best in the world, and he's been doing this forever, and this guy is good. This is you following him into turn one, thinking that you can do what a person with 20 more years ahead of you is doing just because you saw it posted. And guys, I see this all the freaking time. I don't want to learn the basics. I don't want to learn how to read my charts. I just want the money that I see the experienced user get. So I made those pictures today. I thought they would be fun. But guys, this is so real. This is such a big part. Don't keep up with the Joneses. High probability trend trade for the win. I love it when my old school guys come in and remind you of that. So we're gonna focus on 3 rules, Ninja Trader users. Sorry, I told you guys I was gonna be a little preachy today. 3 rules. When a rule is true, it creates an advantage. We're looking for advantages. Now, I am going to say, and I'm going to say this with no hesitation, if when you look at your chart, you say, I have this advantage, and say it out loud. Your pets should be learning to trade as well. I don't have the advantage. What happens is you start associating with what you see with how it relates to your ability to find the perfect trade. So we're going to focus on momentum through rule number 1, clear path through rule number 2, and then rule number 3 is specific to a trend trade. It's pinpointing that spot where the market is most likely to continue. These 3 rules take only 2 charts to prove true. Everything begins on the large chart. It's a slow chart. It's a very broad stroke of a brush. It is so difficult to see change that we lean on it for our first 2 advantages. You will be able to define direction, momentum, and areas using the first most current bar on the large chart. Rules 1 and 2 are met right here. And this is when your large chart will say, hey, let's go look for an entry. You'll use your small chart for entry. It's a refinement chart. It shows all of the inner workings of that one big bar. It shows you change that you can't see happening on the large chart. We're going to use it to pinpoint right where the market is most likely to continue. This becomes your entry for the highest probability trend trade that I could ever teach on NinjaTrader, guys. It's one bar here, typically 20 to 30 over here. You're going to pinpoint right where that little peak is most likely to be formed. We use these two charts because there are forces in charge, guys. There are the institutions, the man, the 1%, big brother, I don't care what you want to call them. I call them the large crowd. And the large crowd creates trends, and the large crowd creates momentum, and the large crowd reacts at key areas. And my plan for the highest probability trend trade ever is designed to keep me in their good graces. Good morning, Master B. It keeps me trading with their trend in the direction of their momentum and not directly into the areas where they may cut tides with their trades. Now, my small chart is a fast chart, that refinement chart. It's the small crowd, and they create a fight, and that fight is just a tiny little move counter to the underlying trend. Rule number 3 will have you pinpointing where that fight is most likely to be lost. You will wait at that spot with a limit order, and that becomes your entry for the highest probability trend trade ever. We're going to use indicators because Nexgen's been an indicator company for 30 years. We don't just teach you how to do it. John Novak wrote the software that goes with the plan. Areas are bouncy. That's like my new favorite phrase. Areas are bouncy. You're going to have divergence highs and lows. And every time you see divergence, I want you to think to yourself, hey, there was a loss of momentum. Whether it's a big chart or the small chart, divergence is a fight against whatever was going on. You'll see Fibonacci resistance, Fibonacci support, yellow 1-to-1s, and a mid-band. You don't have to know how they're formed, and the rules will teach you how to use them. You're also going to have trigger lines. Trigger lines are small, 2 solid lines, and large, 2 dashed lines. Small and large triggers, when they're green, they're up. When they're red, they're down. On a large chart, they're going to look like this. On a small chart, they're going to look like this. The parts don't change per the charts. Small and large, they're just moving averages. That's it. Triggers will be used to define momentum for rule number 1. Triggers will be what tell you that there's a termination condition in the way, and these large triggers will help you pinpoint your perfect entries, guys. You are learning to read trigger lines this morning, and we're going to do it with only 3 rules. Learn each one individually because it's the pieces that create the whole. So we're going to start with rule number 1. Large chart, big chart, slow chart, large crowd, I don't care. How do you want to say it? Must have strong trigger lines. Well, strong trigger lines is just trigger lines. It has nothing to do with price bars. These are called dynamic Renko bars, by the way. It's just a representation of price. It has nothing to do with the areas on your charts. Strong triggers is one look. In an uptrend, when your background is green, small and large triggers will also be green. If they're not, you don't have momentum. Small triggers will be up and above the large triggers. Large triggers will be wide and angled in the direction of that trend. And it's that space, whether it's a wee little bit of space or whether it's big honking space, it doesn't matter. Space between the small and large means that the odds are favorable for the market to continue up. Odds favorable momentum is our battle cry. You're going to see it OFM annotated on charts. In a downtrend, when the background is red, so are the trigger lines. And if they are not, you do not have the advantage of momentum. Smalls below the large, there's that space. Separation means strength. The odds are favorable for the market to continue down. Strong triggers push a market. Strong triggers can break areas. Strong triggers cover mistakes. Strong triggers are rule number 1 for a reason. And they either are or they are not. When the space goes away, when there's no longer a gap between your small and large, you have what we call weak triggers, the opposite of strong triggers. Weak triggers let me know that anything can happen. Now set that next to odds favorable for the market to continue. You can feel the advantage going away. When I have weak triggers, that's where key Fibonacci areas are more likely to hold. When I have weak triggers, that's where the market seems to reverse from the middle of nowhere. So this is a good example. Strength pushes the market down. That blue thing got in the way and created a bounce. Strength pushes the market up. Weakness is where the market reverses, right? Strength pushes a market down. Strength pushes a market up. Weakness is where that market reverses. Now I'm going to do this. These tails on a large chart with all that momentum, that's that fight on the small chart. I'm going to circle a few of these, and we're going to come back just for poops and giggles and see what it looked like on a smaller, faster chart, and see if we got some entries to take advantage of all that momentum. Is everybody good with that? This is typically the easiest lesson. On the first bar, smalls below the large, larger widening, space between, that is your momentum look. Will you give me a Y, please, if you see it? This is void of these areas. It has nothing to do with price bars. It is just separation, guys. Separation is strength. It's the easiest lesson you'll ever get. Once you have separation, once the strength is there, once rule number 1 is met, treat it like a flow chart. If I have strong triggers, then I will make sure there are no termination conditions present. Termination conditions can be horizontal lines on a large chart. Areas are bouncy. It can be divergence highs, divergence lows. It can be resistance, support, yellow 1-to-1s. And that is where the large crowd is most likely to make decisions. So to define a termination condition, we first let price, dynamic Renko bars, reach the area. Bars are coming up, and they come in contact with resistance, with a divergence high with yellow 1-to-1s. Now, when they get there, your trigger lines will tell you what you need to know. Once price reaches an area, price is irrelevant in this process. It will be your trigger lines that tell you everything. And if none of your trigger lines, 4 trigger lines, remain below an area of resistance after price has reached it, that is a termination condition. And there's actually 3 things that may happen. I put may reverse the market, and it could. And if it reverses the market, that's what we call a strong top or a bottom, and that is the precursor for the best of the best trend trade you could ever take. But it could also just create a big, ugly, untradeable bounce and continue up. This bounce, more often than not, will pull you out of a long position if you initiate one into the area, creating a loser and a lot of remorse. The area might also skip the bounce and just blow right through. And the reality is I don't know. I don't know what the market's going to do. I don't know if it's going to break, and I don't know if it's going to reverse, and I don't know if they're just going to fight. It's not my job to know. I don't have to know, because what I do know is that if price reaches resistance or price reaches support and absolutely none of my triggers get through that area, I'm not going to start a trade. My best chance of success is to sit on my hands and wait for the reaction. Can you guys give me a why if that simple recipe makes sense? Price reaches Fibonacci support. None of the triggers break. There's absolutely no reason to take that bounce, that trade. Price reaches resistance. None of the triggers break. There's no reason to trade directly into that area. So you're saying if it makes the bounce, can I go anyway? Well, there's your bounce. Here, watch this. There's your bounce, right, Sergio? That big bar? And then it keeps going and going and going and going and going and going. Hold it. There's your bounce, and it just keeps going. Do you see it? There's your bounce, gone. There's your bounce, gone. So Sergio, If you reach an area and none of the triggers break, absolutely no trades into that area. Now, if it breaks, we're going to find ourselves in this scenario. So here it is reaching the area. And Sergio, you're going to say no short trades, right? 4 trigger lines are above. I'm going to wait for the reaction. My money's important to me. My girlfriend needs a diamond ring. I choose not to trade into that area. And it may bounce, but the triggers will tell the story. If it's really going to break, your small triggers are going to smash through that area. If they don't, it's in the middle of a reversal. So if 2 of my trigger lines break below the area of support, but 2 of my trigger lines remain above, now the area has the potential to break. So Sergio, no matter what happens before that potential, this is when the potential is there. And it's only potential. You're going to have to manage that trade a little more assertively. Guys, this trade will probably be most of your trades. On the plan that I gave you, because I'm such a generous soul, there's a way to take that 50-50 trade. 50% of your triggers are through, 50% are not. And then when all 4 of your trigger lines get below support, not price bars, but when all 4 of your trigger lines get below support, support becomes resistance. Your path is clear, and it remains clear until you hit the next area. Now, there is this misconception among new users that the color of the fib makes any difference. Guys, that's color-coded just so that it's pretty for you. With a big white fib here, we made our own fib. We're fib constructing. Price reaches the area, it's still a termination, no matter what color it is. Only 2 triggers through, it's still potential, no matter what color it is. 4 triggers through, that support becomes resistance, no matter what color the fib is. Don't get caught up and say, well, it's resistance now. I've got to win. Let the trigger lines tell you. In an uptrend, first it's a termination. Every line you hit will be a termination, at least for a moment. It might be a second. It might be an hour. Absolutely no trades into the area if you are following the plan. Then it becomes the potential to break. And then it becomes a clear path if it's really going to break. 4 triggers through. Resistance behaves as support. This is where I start looking for the best of the best, highest probability trade. Now, what's going to happen is that there will be times when there's multiple areas right in your way, guys. There will be times where it's fib after fib after fib into a divergence low, into a 1-to-1. This is 90% of your day in a market that trades an average of $220 billion hourly. You don't have to trade into termination conditions to be successful. You don't have to be the first one into a trade hoping it reverses. You don't have to be the last one in trying to squeeze every penny out of the market. It takes $400 a day to put you in a 6-figure trading income. I'm going to give you guys this picture. So Sergio, this is a good one for you. Price reaches resistance. None of the triggers. That's your goose egg. It's a 0. Notice that it's red. Red means stop. 2 triggers break through. The potential is there. And a lot of you are going to grow into this trade and take it with only 2 triggers. It's still not your best look for a breakout. 3 of the 4 trigger lines above resistance, above that Fibonacci area, that's a yellow, cautious, medium probability, manage assertively, but that's a better look for a breakout. 4 triggers through, that's when the path is clear. Not when the back of the bar clears, not when price peaks its head above. 4 triggers through for a high probability trend trade is when that path is clear. So I dropped that picture in the room, guys. Learn it, live it, love it. And what you will find with a little bit of study, my friends, watch this. 2 triggers through, potential to break with momentum. Do you guys see it? That's what it looks like in a live market. 2 triggers through, had the potential, made it to the next area. That's where the reversal came from. Weak triggers, there's your reversal. Only 2 triggers, didn't break. But eventually, here you go, Sergio, there's the bounce. When is it cool to go long again? When we start breaking above. And that's the 90%. That's the one that kills us all because it means we have to be patient. 2 triggers through, untradeable bounce. Weakness, there's a reversal. Weakness, there's a reversal. Look at that huge move. Holy smokes. And it started with a trend trade that may have very well been a loser. Resistance becomes support, guys. All of these lessons are repeatable. They're recognizable. All of these lessons are laid out for you. You've just got to learn them. Right now, with the potential to break, that divergence says, that loss of momentum says this is less likely to win than it is to lose. We'll come back and check it and we'll see what it does. Are there any questions about termination conditions? I'm a big language fan, guys. Price reaches the area. Where are my triggers? Say it every time you're looking for a trade. Did price reach an area? Where are my triggers? It'll keep you out of a metric ton of trouble. But once we have it, this is the good stuff, guys. Once the large chart has defined your trend and you know which way to look for your rules, once the large chart has strong triggers, once the large chart has nothing in the way, you have the best look to go define your entry, to find that fight. And that fight is just the small crowd trying to have their way with the large crowd, and it rarely works, guys. We're about to show you the easiest way to use the software, the most basic, the highest probability. And when you have momentum and your path is clear, you're going to pinpoint where that tail on the large chart is most likely to form by using a smaller, faster chart. We are not going to trade these tails. We're going to trade a pullback to an area inside of triggers for the entry. Hey, what's going on, Marika? It's great to have you in the room. And welcome, first day of training. Which platform are you using? Are you on NinjaTrader or are you on TradingView? And I love that you initiated a conversation. That's wonderful. You're on NinjaTrader. Cool. So I'm not sure if you just got into the room. If you did, you missed the bulk of the very basic NinjaTrader. So let me give you a couple gifts if you're comfortable downloading from the room. This is a Word document called Trend Trade Simple. And in this Word document is exactly how I teach the room, talking about 3 rules on only 2 charts. It defines the first 2 rules and it reminds you that just keep it simple. Focus on those. It gives you the 3 rules here, the charts they're found on. It describes the indicators that you'll be using, and then it breaks the rules down individually. And it's the individual rules that create a trade. So that document actually goes through everything that I talk about in the first hour every day. But I'm going to do one better for you, Marika, because I want to make sure that you get everything you need. This link that I'm giving you is my first hour. It's the same hour every day. That is the very basics, the 101 version of the highest probability trend trades you can ever take. And if you tune into this classroom Monday through Friday, you're going to hear that between 9 and 10 every morning, creating repetition to help you understand what it is that you're looking for. And then one of the most important things, if I do say it so myself, is that this room is designed to be a discussion. So we will talk about the rules every day. You'll have the ability to simulate, to just practice and make a lot of mistakes, I'm hoping. And you can post your trades in the room, and every trade that you post in the room, you're going to get a private session with me. And the private session is going to be this. You're going to post in the room and say, hey, This is what I saw, Mark. I noticed that the triggers were up, so I was looking for long trades. I was on the weak side of those triggers, so I was ready to manage if it needed to happen, and I had plenty of room to make money. And then I didn't just jump in up here hoping the market would go for me. My rules said wait for a pullback to an area with a close on the correct side of those small triggers. And that's where my long trade was initiated. And I made a butt ton of money. How did I do, Mark? And I'm going to say, you know what? That is the perfect trend trade. Put that with a gold star in your trade tracking sheet and make sure that you learn this pattern, because that's the pattern you can prove wins more than it loses. And it is the exact same thing every day. But here's the disclaimer. And this is important because I felt this way in the very first day, first 2 to 3 days, and nobody told me that that's what it was going to happen. You feel like you're drinking from a fire hose. There's a lot of new language, there's a lot of new charts, there's concepts that you've never heard. I promise you, if you stick with me for a couple days and just listen and learn the vocabulary, by the third day, you will amaze yourself and you will probably find yourself in a position where you're already starting to see these trades set up. Your Ninja Trader keeps cutting off. What can you do? I have got the best fix in the world for you. Are you ready? We've got this guy named Jason, and he's our tech guy, and I'm going to give you a link. And if you will do me a favor and put a ticket in with him and say, Jason, my Ninja Trader is not behaving. Can you help me? He'll go through your computer, he'll check your settings, he'll make sure that everything is optimized to give you the best Ninja Trader experience ever. And he will take care of you remotely, doesn't have to knock on your door. The only things that Jason can't fix are the things that aren't broken. So I would start there and just go ahead and take advantage of every resource that Nexgen offers. We will never leave you high and dry. We will walk with you every step of the way. And that goes for everybody. And Ninja Trader does use a lot of resources. There is absolutely no doubt about that. I don't know how tech savvy you are. But here from the user guide, there is Ninja Trader 8 best practices, some things you can do on your own if you're not interested in going to tech. I personally would just go to tech because Jason is unbelievable, and he's a really nice guy too. But there's Ninja Trader best practices as well to help you get to where you need to be. All right, guys, let's go define entries. So we've got the advantage of momentum. Strong triggers are in play. We've got a clear path. There are no termination conditions. This is the most valuable phrase you're ever going to learn as a Nexgen user. My entry is so specific that I'm going to use a limit order to buy or sell a pullback at an area inside of triggers. And it's important that you learn this entire phrase. I'm going to use a limit order, which means that my entry is so good, I'm going to wait for the market to come to me. And I am going to have that limit order waiting to buy or sell a pullback. And that is the little fight that comes from the small crowd. And I'm going to do it in an area. Fibs, midbands, yellow 1-to-1s, because areas are bouncy. And it will be inside of triggers. Inside of triggers, because triggers will show you exactly where the fight is most likely to go. And it looks just like this. This is your entry pattern. It's the same pattern every time. I will use a limit order at an area inside of triggers. And all I'm going to do is buy that pullback, that little push down when all of my indicators say up. It's just a pattern. And it begins with a reversal bar. The reversal bar says, hey, the fight is on. The reversal bar is not your entry. You'll know exactly where the fight is most likely to go, somewhere from the top to the bottom of the large triggers. Now, there's two sets of large triggers on your entry chart. The smooth ones are the 5-1 triggers from the entry chart. You can compare those to the small and say, wow, I have strong triggers on a smaller time frame. And then the stepped triggers are just the large triggers from the large chart. When they overlap, it gives you the least amount of room for an entry for those areas to be, because triggers only define the retracement. Areas within fibs, midbands, and yellow 1-to-1s, they will define where the market is most likely to bounce and continue with the large chart advantages. So first, it's a reversal bar. Look for your triggers, define your area, and activate your limit order just above the highest point of support closest to the reversal bar, and hope the small crowd comes from you. This blue shaded box is where the market is most likely to continue. Once you get below those areas, once you get below those triggers, you have found yourself where the market should not go. If those three rules are going to come together and produce a winner, you should not blow through the retracement zone or the areas within. This is where initial stops are placed, guys. Once you get below those trigger lines in a long trade, you don't know if, when, or where that market's going up. And this is where Nexgen users trading the high probability trend trade using the KISS plan cut ties with their trade. And anything that wins 70 to 80% of the time, guys, you will be cutting ties with that trade as a loser, typically 20 to 30% of the time. So the pattern down. Large chart says down. Large chart has momentum. Large chart has a clear path. Small chart shows the fight. This fight is not seen on the large chart. You need the small chart for it. The trigger lines define the retracement zone. Areas inside of triggers, all caps. That's where the bounce is most likely to happen. You will develop the courage to activate a limit order, to sell that market, and to put your stop above those trigger lines where the market shouldn't go. This is where you no longer have the advantage of rule number 3. Entries are not taken from the wrong side of the triggers in the KISS plan. This is where stops are placed. And when you put it together, it's just a pattern. This is from November 6th of last year, which sounds weird. First, it's momentum. Keep your eyes on the bar with the tail. Then it's the potential to break. And when these two rules are met, the market's about right here at 59.45. The market is right here, and you are terrified that it's leaving you behind. And then the entry pattern starts. There's your pullback. There's the area inside of triggers. And right there at 59.29-ish is where Nexgen users are taking the highest probability trend trade ever. Understanding if it's going to be a winner, the market shouldn't get below the triggers. And when we talk about where the market is likely to go, all of that momentum is more likely to take you to the next Fibonacci area. This was 11.625. That's the exact same pattern in 2021 and the exact same pattern in 2022. Now, guys, this pattern has been repeating for as long as I can remember. And I'm old. And I want you to see something. Look at that. Momentum and the potential to break. If I circle the tail, it pulled right back to the area inside of triggers. Do you guys see it? That's your pattern. And then momentum and a clear path. You would activate your limit order just below the area inside of triggers. You would put your stop about 5 ticks beyond those triggers, and you would say to yourself, I've done all I can do. I've waited for momentum, rule number 1. I've ensured that I have a clear path, rule number 2. I've sold the pullback to the area inside of triggers, rule number 3. And now I'm at the mercy of the market. This is a pattern that typically wins 70 to 80% of the time. This is a pattern that is repeatable, that is testable, that you can prove. And the plan that I give you gives you a management plan for it. It says if this bar becomes a down bar, I will reduce my risk to 2 ticks above that bar, giving me 4 ticks of risk on this trade. If they reach my first target at $100, I will exit a contract, I will go break even, and my second contract is only $200 in the distance, turning this into, should it produce a winner, a $300 trade. Guys, this is it. It is rare that it sets up the moment after. we discuss it. But look at this. It's just a pattern. It's the established trend. It's the fight, and it's pinpointing right where that fight is most likely to be lost. Guys, this is the high probability trend trade. This is the best of the best. This is the easy one. This is the trade that teaches you to see the other trades. This is the trade that gives you the ability to read your indicators and recognize momentum and understand that the path is clear and pinpoint exactly where the market is most likely to bounce. I think we've been teaching on NinjaTrader nearly 20 years. What we're about to talk about is on TradingView, and it's just a trend trade. And this is from Nexgen's 2004-2005 plan. I would dare you guys to do a little internet search. How many people have been in this business for nearly 30 years, teaching people, training people to read indicators, to trade? So we're going to let this one play out and see what happens. I'm going to read what John Novak put in the room. And I still say it every day. I think it's nothing short of spectacular that the CEO of the company shows up in the education room daily and offers lessons. John says, as I learn to golf at a higher level, here's my thought of the day. Learning to golf and learning to day trade parallel each other because both are individual pursuits that demand high levels of mental discipline, emotional control, and focus on a process over outcome. Both fields are unforgiving to beginners, require immense patience, and punish impulsive decisions driven by fear or greed. Amen, John Novak. Whoa, what was that? My little clicky thing wasn't on. All right, does everybody see that even though everything started up on the small chart, the large chart hasn't changed its demeanor? It's still odds favorable, momentum down. It's still clear path. This is still a valid trade. We'll just come back and check on it. We won't even mess with it. You guys ready to talk TradingView? TradingView is a different setup, guys. It is still only 3 rules. The first 2 are actually the same rule on 2 charts. The second thing is that it is just 2 charts. It's a big chart, happens to be a 15-minute chart. And guys, a lot can happen in 15 minutes. So we're going to use that large chart to define direction. We're going to use it to define momentum. We're going to use it to define key targets. And we're going to use it to define terminations, areas that could stop the market. Your 1-minute chart is your small chart, and this chart is going to define the immediate strength of the market. This chart is going to define your entry points. Your large chart is so big and slow. It doesn't have large triggers, doesn't need them. It doesn't even have background colors, doesn't need them. It just has these small triggers, and when they're cyan, they're up, and when they're white, they are down. Your small chart is going to incorporate both small and large triggers. You can use these to define momentum the same way you would on NinjaTrader. Both charts will have areas. Now, I've been pushing this picture into the room every day. I'm going to tell you guys right now with no hesitation, learn these areas names. And on TradingView, I've even put how they can be used. So I'm going to drop that in the room right there. Areas that can behave as terminations, areas that can be used for entry. And areas are bouncy. That's still going to be, I'm getting that knitted into like a doily or something. Areas are bouncy. So let's talk trend trades, guys. Trend trade. In order to take a trend trade, you must be trading with the trend. Does that make sense? Can you guys give me a why if that makes sense? If the trend is up, you cannot take a trend trade short. If the trend is down, you cannot take a trend trade long. I say this for a reason. So define the trend. And then it's up to you whether or not you want to make the choice to trade with the trend. Your 15-minute is not trading directly into areas because areas can create bounces. So when I say not trading into areas, it's funny. If this is a door right there. That's a door. That's me walking into a door. This is me walking to a door. Room gives you, having room to trouble means that there is space between your entry and the trouble. And if there is no space, there is no trade. And the same is true on the 1 minute, not trading directly into areas because areas can create bounces. And then rule number 3 says buy or sell a pullback at a 1 minute area, at a zone, at a 1-to-1, at a mid band, and make sure that there's a close on the weak side of the triggers before you enter. And if there isn't, you don't have an entry. So we're going to go through the individual pieces. And I think these are pretty easy lessons that take a little repetition to cement them. Direction is defined by the 15-minute small triggers. If your small triggers are up, you can only take trend trades long because that defines the trend. It's not the only trade you can take, but if you're going to call it a trend trade, it better be going with the trend. If the small triggers are down, I'm only looking for short trend trades. Up and down, pretty easy lesson. Rule number 1 says 15-minute, not trading directly into areas. So wherever that market is, do I have room before I hit something? You either will or you will not. My triggers are up, my trend is up. Here's my most current bar, and there is not a darn thing in the way. Can you TradingView users give me a yes, a Y in the room if you see that the direction is up and there is absolutely nothing in the way to stop my forward progress? Then and only then, my friends, then and only then will I go to the small chart and look for an entry. And rule number 2 says that the small chart is not trading directly into areas. So if I got a pullback, there should be nothing in my way. There shouldn't be a zone. There shouldn't be 1-to-1s. There shouldn't be a mid band. There shouldn't be a VWAP. There shouldn't be an outer band. There should be room from wherever I'm going to enter that trade to make money. And then this is your entry look, guys. Pullback. Pullback is not a 1-bar affair. It's just not. If you're looking for a trend trade, that is not a pullback to an area. That would be a momentum trade. Look, your pullback starts when the small triggers roll. This is your sign that the fight is on. And the moment the small triggers roll, you have to look lower. You have to say, okay, price is up here. What are the areas below me? And you will literally call your shots. And I think that I brought a picture up from the other day. Let me find it. You will literally call your shots. And I really am amazed at just how easy this methodology makes things when you learn a couple key concepts. Let me find that picture. There it is. This looks pretty familiar right now, doesn't it? The triggers are up. Room to trouble. Once those small triggers roll, I'm putting boxes around lower areas. I'm saying I've got to come down to this area. I've got to get to something lower. And when I get there, I'm not just entering the market, guys. This is the most important part, I think, of the trend trade entry. Your entry is a close, an up bar for a long trade, a down bar for a short trade, and both corners of the bar in question, whether it is up or whether it is down, both corners must be below the small triggers. Both corners of that bar must be above the small triggers. Small triggers are your immediate momentum identifier, guys. And when they are down, when you get to the weak side, the right side above them, that's where the 1 minute chart reverses and gets back in line with the large chart more often than it doesn't. John, I will see your clear path picture and I will raise you one. If you see the wall and you try to do it anyway, you're going to get vanity plates. Ha ha. Morgan gave me this picture. It's one of my favorites. So guys, not only do you have to wait for the pullback, but you also have to wait for the close on the correct side. And it's going to look like this every time. First, it'll be trend up because we're looking for trend trades. Then it'll be room to target. And if there is no room to the target, guess what? I don't even need a small chart. On my small chart, the moment the small triggers roll, I've got to wait for the lower area. The moment the small triggers roll, I start drawing boxes around areas lower, and I say this is where the market needs to be in order for me to take a trend trade. And I don't do anything until it hits that area. And I still do nothing until that up bar finishes on the correct side of the triggers. And guys, I want you to see how long you may wait for a trade. Everything says up, there was room to trouble. John Novak sat 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 minutes before the market gave him his perfect entry. And once it did, it was easy. It was beautiful. John, I get warm fuzzies with this picture. Now let me show you guys something. Why is the methodology so important? Because here's where it reached the area. And there's where it reached the area. And there's where it reached the area. Again and again and again. There's where it started up. If you learn this one pattern, down, room, once the triggers roll, pull back to the area, down bar, sets us in motion. Guys, that's your trend trade. And I wish that there was more to it to make me sound smarter, but it's literally 3 rules, and the most important rules are exactly the same. Rules 1 and 2 are exactly the same. So it's 2 rules. Don't trade into stuff. Wait for your perfect entry. And now let's talk management. One of the things, because this is such a big, slow chart, you'll know exactly how you're going to manage a trade before you ever enter the trade. And you're going to do that with a comparison of where the most current price is in relationship to those small triggers that defined your trend. So the small triggers are up. I've got room to targets. And now we're going to throw in the management element. I'm on the weak side. And what the weak side does is it tells me how to manage. So there's 3 places price can be the most current price in relationship to those triggers. And we use the most current price because it could be here, here, and here inside of one bar. So if I am left of the small triggers, whether it is up or down, if I am left of the small triggers, I'm on the strong side of the triggers. And the strong side of the triggers is where a market is difficult to stop. If I am left of those small triggers, this is where I may hold for bigger moves. This is where 1 minute areas are more likely to break. I might be a little looser with my management. Now, if I'm to the right of the triggers, this is the weak side of the triggers. This is where reversals come from. This is where trend trade entries come from, because this is where the market is more likely to change direction. I'm still looking for longs to go with the trend. I still have room to trouble, but 1 minute areas are more likely to create a bounce. I may choose to get paid at 1 minute areas, get out of that trade, and simply wait for the next opportunity. Now, if I'm inside of the triggers, I'm not quite strong, but I'm certainly not weak. This is where split targets are fantastic. This is where getting paid at the first sign of trouble, maybe get to break even, manage a little more assertively, but let one of them hold, right? Because maybe that market wants to go to the large short targets. I'm going to give it the chance to do it. So learn this one too. Learn the areas and how they're used. Learn that simple pattern. And now you've already got a way to manage as well. And on the KISS plan for TradingView, it even tells you where to put your stops. For trend trades, the initial stops are 3 to 4 ticks below the pivot low or high where the market should not go. And then it's even got a momentum trade on there for you. So guys, that is my first hour. My first hour is pretty stinking consistent. I say the same thing every day. I talk about the same rules every day. I give you the same plan every day. Triggers are up. I do have room to trouble. I'm on the weak side of triggers. If I get a close on the correct side of the small triggers, I can take a long trade. Pretty cool, right? That's how easy it is. Are we going to get it? I've got 30 seconds to wait for that close. But here's the challenge. A close on the correct side of the triggers doesn't give me a lot of room into that zone. Doesn't give me a lot of room into trouble, guys. And then, John, if you are these guys in trades at red flag, you will be liquidated. Whoops. Hold on. Get the picture up. You will be liquidated by our risk management system and your account will be closed. And we talked about this at the beginning of the room as well, John, when we talked about red news. If you are in a position during red news, you violated it. We just had red news, right? So this is 3 more today violating. 3 more. Guys, that is the silliest way to lose an account. It really is. Are there any questions about the high probability trend trade? Pam, I know day 2 probably still a little overwhelming. Marika, day 1, probably a lot coming at you. The cool thing is I'm going to say the same thing tomorrow and the next day, and that repetition is really going to cement. So the rest of the day is going to be spent looking at the charts that you guys have posted. I've got a couple lessons put in place for you. And then I wanted to share this. And this is something that John wrote in 2008, guys. And this is a big part of the path to get to where you want to be. And I don't know if John did this in a seminar or sent it out. Back then, probably Pony Express or something. Nexgen will supply the Fibonacci-based software and trading rules, along with the coaching that will increase your odds of winning more than losing. After choosing Nexgen to be your technical analysis partner, do not worry about how long it will take to become a profitable trader. Worry about the process of learning. And remember that simulation is not trading, it's creating muscle memory. Aaron, forexfactory.com. Oh, there we go. The bot got you. Your second goal is to simulate 25 of the exact same trade setups. And this is where one of the things that I wanted to talk about today. Both of the plans that I give you have checklists on them. And whether it is the high probability trend trade, there is a specific checklist for entry. And if it is one of those potential to break trades, there is a specific set of rules for entry, which means that if you're taking 25 of the same trades, you have to have marked yes to all of these exactly the same 25 times. Same is true with TradingView. If you're not doing the same trade, you're not going through the drill, guys. Write down, use screencast, post in the room, get coaching. Everybody's going to do it at a different rate. The more you do the 25 trades, the better it's going to be without the deviation, without the hesitation, guys. And when you get to real money, if you fail to follow your plan, go back to sim. That's okay. This was the coaching. This is what Mark Douglas used to tell people. And when you trade real money and you fail to follow your plan, you're not a profitable day trader yet. Let's go back to the books. Let's go back to study. Becoming great at any profession has a cost. Your cost will be small losing runs in a live market. But ultimately, you will learn how to make money most of the time. You will act without deviation, no hesitation, guys. And that's when you know you've done it. Nexgen provides analysis, rules, and coaching. That's all I can give you. Only you can do the study. Only you can take the pictures. Only you can follow the checklist. Only you can post in the room for help. I'm here to help, but you've got to do your part. And if you believe you are going to be part of the 6% of day traders that find success by watching a video, you're creating unrealistic expectations for yourself, guys. Get in, get your hands dirty, post, learn the advantages. Oh, did they get us? They did. They pushed to where the market shouldn't go. Those sons of guns. And then they went down. Man, oh well. Anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. So as we get into the second hour, guys, we're going to do an awful lot of chart reading. We're going to read your charts. Do not be the trade police. Do not get on your pedestal and say, hey, those rules aren't met. That's not right. He can't do that. Guys, trading is an individual sport. You can do whatever you want. We will go back to each chart and we will identify momentum, path, and entry. That's my job. So if you're on NinjaTrader, I need you to identify momentum, path, and entry. Tell me what you saw so I can make sure you saw it correctly. Tell me what you did so I can help you do it better. The same is true for TradingView. Tell me the direction. Tell me where price is. Let me know you had room to targets. Tell me why you entered. Use the language from the rules. Because what you're doing, guys, with these amazing annotations is you are writing the recipe for success. You're making your efforts repeatable. You're making them so that you can study them. You're making them so you can prove them, so that you can validate them. Ultimately, so you can trust them. So you never hesitate when it's time to enter the trade, guys. And when you know what you're up against, you know whether or not you want to enter and how assertively you need to manage. So I'm going to stretch my legs for 5 minutes, guys. When I come back, we will get to the process of reading your charts and go stretch your legs. If you have questions, post them. If you have charts, post them. If there's anything specific you want to talk about today, let me know. I've already created a couple different lessons, not going to lie. So I'm going to back these up to get to the lesson that I created for you guys, because I know it's going to come into play. And I know it's coming into play because it was one of y'all's charts that sparked me to go look for the lesson. Dun, dun, dun. There it is. Cool. All right, guys, I'll see you in 5 minutes. get at it. Let's do it. I'm going to scroll up to the very top. I just want you guys to see. I scroll like this. So in the event that I miss a picture or a comment, please understand that it's not intentional. I want to make sure that I get everybody the feedback that they ask for. I want to make sure that I don't miss anything. So do me a favor, if I miss one of your pictures, politely say, hey, Mark, I think you missed one. Here it is, reposted for you so you don't have to scroll. Because let's be honest, Mark, you missed it the first time. What are the chances you're going to catch it the second time? Lot of pictures. And you know what's kind of weird to me, and this just may be me, is that all of the pictures posted are from the same 5 people, it seems. The same 5 people posting all the time. Guys, I know you're taking more trades than that. All right, so let's see what we have. And then, Paul, are you with me here? I definitely have some questions about your plan. Everything says up, and you say it's an HVA short. I don't have a termination on the large chart. You're not trading from an HVA. It's down, and it's down directly into a zone. And I'm not sure if you have a checklist for HVA. I'd love to see it, because this doesn't resemble anything that I've ever used as an HVA trade. This is more of a let me go counter trend and hope this momentum pushes me to trouble. And it did, and I'm glad that it did. But I can't identify any working parts on this trade as anything that I ever taught. So I'm curious how it's an HVA trade, and how do you repeat it? And I'm not doing this to beat up Paul. I'm doing this because if you go through and you annotate a large chart, and Snagit's not responding, here we go. And the large chart is up, and there is room to trouble, and it's in transition, and everything about the large chart says, hey, let's go up. So my entry rule is, with momentum on the small chart, I'll just jump the fudge in, JTFI, right? And see if that momentum carries me to trouble. And Paul, I'm not saying it's a bad trade. I'm not saying you didn't have a fighter's chance in this one. You are fighting trend. It was perfect for a trend trade. Everything set up, and you took the short probably to get to the long. Does that make sense? So if you're going to call it an HVA trade, do you manage it like an HVA trade? The white bar long got you in. What does that mean? Which white bar got you in? It wasn't this one because it wasn't done printing. It wasn't this down bar because you're in 2 bars later. It wasn't this one, right? It couldn't. So which white bar got you in? What do your rules say about the white bar for entry? And the only reason I ask, Paul, and this sparked one of the lessons that I want to have for today. Naming your trades. Naming your trades, guys. And I'm going to talk about why I think this is so important. And I'm going to give you guys this, and I want you to read it. This is your homework. Naming my trades means I know the exact rules to enter and the exact management plan that goes with that particular trade. I should have a checklist in front of me with those rules to be sure that I'm entering correctly. And if I break rules for entry, it affects my management. So, no worries, Paul. But I think these conversations are important. And to be honest with you, John Novak's had the same conversation with me probably 1,000 times, guys. So don't get put out. This is going to make us all better. So if I call my trade the high probability trend trade, I've got reasons to exit. And if it's a 50-50 trade, it's a different set for entry and it's a different set for management. And it goes for this. You're done for the day. Another rule that should be added once you're green for the day, shut down your machine, your 2 cents. That can be your rule. When I'm green for the day, if I'm following rules, Master B, I try to get greener. Until that changes, until the green stops flowing, then maybe I'll call it a day. But you're right. Have your goals, right? Have your goals. Shut it down when you reach your goals. That's discipline. That's good stuff. I like it. Everybody's got a different approach on that. So, Paul, not beating anything up, but if you just jump the fudge in, I like to know, how am I going to manage it? Where am I going to put my stop? What's going to take me out of that trade? So you jumped in small chart momentum. And to be honest with you, Paul, you ignored everything on the large chart. And this trade says, when I have odds favorable momentum on the 1 minute, I'll jump the fudge in and hope it hits the next line. And I'm not saying that's bad, right? No, I'm with you, Master B. I'm not saying that's a bad approach. But call it what it is. Let it be what it is. Doesn't mean that it's wrong. But let's give it a name so that we have management. And it was the short to get to your long, right? Pretty cool. Well, you can, but can you make it consistently, Paul? Can you make consistent ticks fighting the large chart? Can you make consistent ticks trading into areas? And so if you can't, billions, 269 million traded daily on the NASDAQ, give or take, and you're trying to chase a few ticks by fighting trends, right? By fighting triggers. So I always ask myself, how does that serve me? Wanted to enter long badly, didn't meet the rules, no close above. Didn't do it. We all have to get to that point to where we realize that it isn't. All right, triggers are up. Pull back for a trend trade. So once again, Paul, and everybody in the room, if the triggers are up and the trend is up, how can I take a trend trade short? Does that make sense? How can I take a trend trade short if the trend is up? How can I take a trend trade long if the trend is down? So I don't know what happened first, Paul. You had divergence, and then the market started to go down, and that's not a pullback for a trend trade because it's not with a trend, and it's not a momentum trade because you don't have a momentum. This is literally, holy shit, I think it might be going down. I'm not sure. Oh man, there it goes without me. Let me jump in with momentum and hope it hits the line. It's the same trade, isn't it, Paul? Don't need the large chart. Doesn't factor in. It's the exact same trade. Now, you may be stumbling onto something that suits your needs, right? But let's not call it a trend trade because it's not with the trend. Let's not call it an HVA trade because it's not from a termination. Let's just say, man, I jumped the fudge in. I'm willing to risk this much money. I sure hope it goes to that mid-band. So if nothing else, Paul, you can formulate a management plan based on the trade that you're taking. Triggers are low. Triggers are up, in transition, clear path, and not your pullback, right? That's kind of a momentum style entry. And then it pulls back, breaks away, pulls back. That is your true trend trade entry right here, Paul. Do you see it? This is you anticipating it, afraid that it's going without you. And then there is the true pullback and close above, and it's just about the same price. You just had to sit through a little bit of headache, and then beautiful, you get to trouble from transition, and you protect your investment from that trouble. Nicely done. Great management. Just a little antsy. But great read with the trend, plenty of room, recognizing trouble, protecting your investment from trouble because it's transition. All right. This is a case of 15-minute setup for short is so good it can't be turning against me stubbornness. Forming that opinion, right? Triggers are down, strong side of the triggers, room to trouble, and then Paul, what didn't you do? So you didn't, well, you said the zone wasn't there, right? Or was the zone there, but there wasn't one up higher? But you never get the pullback. There's never a pullback here. Do you see that? And that was one of the lessons that I wanted to get on for the day. And I made pictures this morning, and I love it when you guys post in the room because I really do believe we all become better traders because of the time that you guys spend posting in this room, letting me know where the lessons need to fall. So let me see if I can find that picture. Here we go. This is a pullback. So if you're going to wait, you got to wait for that higher area once those triggers roll, and there's nothing there. So these little blips aren't a pullback. A pullback's going to be a little more substantial than that on a 1-minute chart. So there's your pullback, Paul. There's your close below, or your close below, and then there's your room to trouble. Does that make sense? And then there's your pullback. There's your close below. I don't know where the zones were. There's your push to trouble. It's that patience piece that's going to give you the better entry. What you did is you jumped in right at the fizzle out point. Does that make sense? I like it. Your large chart reads are good. You're adding a bunch of trades that aren't trend trades, and you're beginning to confuse rules a little bit. 15-minute down, strong side, clear path. You go long. No terminations, right? No terminations, and you just go long. And you're saying it's a white bar long, but there's no termination on the big chart. So technically, it is not a white bar long. So guys, this is the other lesson that I built for you guys today. All of you are just enamored by this white bar. I saw John Novak do it in the room. Holy shit, I have to take that trade. So there's your checklist, guys. There's your rules. There's your, oh no, don't do it. There it is, even with stuff there. Yes, absolutely. A white bar is just a white bar. There's a white bar right there. Why didn't you go long? Right? The white bar trade, guys, is the precursor to the HVA trade. The white bar trade says that when I pull back to an area, I'm looking for where it started. There we go. This is it. If I pull to a big chart termination condition and I get this one pattern with the rules met, it's an opportunity for me to try to catch that bottom, to anticipate an HVA trade. And you're just doing it from the middle of nowhere, fighting the trend, hoping shit goes up because of one white bar. And that's okay. As we learn new rules, guys, we're allowed to make mistakes. We're allowed to misunderstand the rules. We're allowed to break them, but post them in the room and have the conversations. And now Paul has the perfect mental note. Oh, if I'm going to take this pattern, I need it to come from that termination condition. I need that 15 to tell me you've reached an area that could stop the market. Good stuff, Paul. Great stuff this morning. Great lessons in there. And I even had John Novak double check the white bar trade checklist for you guys. So if you're chasing that trade, I just gave you a checklist for it. If you break the rules on a counter trend trade, you're likely to get messed up, guys. All right. This is from yesterday. I remember this one, Pete. Everything says down. You get below trouble. Absolutely, Paul. you're trading directly into trouble. It looks like on the small chart or on the large chart, you had a fib at 57.69, 57.69. Okay, so you're taking a little momentum trade there, and then it crashed and you had to manage it. Good job. We saw that one yesterday. I remember that one. Odds favorable, momentum up. Crude oil news. Thank you for that. Thank you for that. That's okay. Odds favorable, momentum up. Nothing in the way. Divergence. Oh, you had a fib here. There we go. There's the fib. And you're saying, man, I can't go up anymore. I'm going to go down because my small chart has momentum. Paul, this is your trade. Odds favorable, momentum south with nothing in the way. Let's go see if they hit something. That's all it is. Nothing wrong with that. Momentum is hard to stop. I say it every day. When the market is screaming, when there's nothing in the way, it's hard to stop that market. Pete knows that that big ugly blue line could, so he gets paid at it, where the market is likely to go, with momentum and path. Beautiful, Pete. Triggers are up. I think we saw this one yesterday too. Yeah, we did. That's your gap theory. Mid-band's a termination. You traded directly into it. It worked out. You got paid quickly right into the termination. That was yesterday as well. I remember that one. Market is trending up. There's nothing in the way. All of the momentum. Pete says, let me get past that thing that can create a bounce. I really want to be in, but there's something in the way. I really want to be in, but there's something in the way. Let me clear it. See if they can't push to the fib with all that momentum. Great patience, Pete. Great patience. Momentum and path, guys. I can't say it enough. If you learn momentum and path, same trade, sorry. If you learn momentum and path, you're going to find a way. Now here come the lessons, Pete. You ready? Here come the lessons, everybody. This was just a bad trade when I first woke up and hadn't had my first cup of coffee. I have that rule too. Something in the way. Strong top, triggers rolled, odds favorable, 3 triggers through the termination. So we're going to do 2 lessons here. And this is for my new people. If there are 3 triggers through, is it a clear path or is it potential? And guys, this is so important for you guys. Is it a clear path or is it just the potential to break? Still just potential. Why do I ask that question? Other than I just love the sound of my own voice. If it's only potential, I'm gonna lean on the other 2 advantages. And let me know, sometimes I say things that may not make sense. If it's only the potential, I'm gonna lean on those other 2 advantages, guys. I'm gonna say to myself, it's probably the other 2 manages that are gonna have to carry me to the promised land. Make sense? Cool. So let's put that recipe for the perfect trend trade up top. Pete has all the momentum you could ever hope for. I mean, that is 32 flavors of awesome on momentum. Pete has an amazing area inside of triggers. But Pete doesn't have a clear path. Is everybody with me so far? It doesn't mean that there's not a trade. But let's talk big chart, small chart real quick. Your large chart is so slow that it's hard to see change. Your big chart will sit on a rock and bat its eyelashes and sing for you until you crash your trading ship into it. It's the siren song. It's the reason we look for entries. Your small chart will show change that you can't see on the large chart. So I made this picture for you guys that are taking those 50-50 trades and losing more than you win. The large chart is telling you it wants to go down. The large chart saying there's nothing in the way, or maybe it's only the potential. And the sellers are totally in control, very much like Pete's chart said. Now, let's talk about the information that your small chart can give you that will pay huge dividends in your management game. Your small chart will show you change that you just can't see happening on a large chart. It's too slow. And at this exact moment, when it looks like the sellers are having a flawless run to the downside, this first one is the buyers testing. We're going to steal some of their momentum. We're going to push it up, and we're really just going to test the resolve of the sellers. And the sellers say, nope, we really want it to go down. But the buyers say, you know what? Do you really want it to go down, or are you just caught in your old ways? And they push it up again. And the sellers say, I'm telling you, we want it to go down. And right here, the buyers throw out a third divergence. And that third divergence is the only small chart termination when there's momentum and path on the large. And this is the buyers saying, damn it, we just don't want you to go down anymore. We either want to push up a little bit so that we can get a better entry and come down with you, or maybe we just want to take over. You'll never know. But these divergences tell me that the fight is on. Does that make sense, everybody? And all the while, the large chart looks like there is nothing that's going to stop it. Now, if it's the perfect high probability trend trade, it takes 3 of them. But if it's only the potential to break, the potential is there, but here's my first loss of momentum, my first indication that the buyers may show up and ruin my good time. Most of you will still take a medium probability trade, a 50-50 trade with 1 divergence. You'll say, I'm just sick of waiting. I don't care about optimizing my chances of success. That's cool. That's your right. Guys, if you get a second divergence and there is only the potential to break, there will be a point in your trading career. This isn't me giving advice or telling you what to do. There will be a point in your career that you get so sick of losing that trade that you'll stop fighting multiple divergences into an entry, especially on the potential to break. It is your small chart telling you that your odds are better if you pump the brakes rather than hope it goes down. Does that lesson make sense, everybody? Small chart change showing, or small chart showing large chart change. And let's go through and let's take a look. They're fighting a little, right? They're fighting more. They're fighting again. My large chart's losing momentum. And they're just pushing beyond the triggers where the market shouldn't go. One of them didn't quite kill it. It pushed it beyond. Down here, one of them didn't kill it. But you can see that there wasn't a fight anymore. Let's go see if we can find one of those potential to break trades that didn't. Right around 4:30 a.m. Guys, this is management. This is an entry. This is management. 319. There we go. Potential to break. Divergence, divergence, loser. Do you guys see it? 1 divergence, hey, check it out. I might be able to make a little money. 2 divergences, not making that money. Guys, it's simple little patterns that are repeatable, simple little patterns that are identifiable. You've just got to learn them, but you've got to go back to that very core concept. The idea that if you let everything revolve around momentum, path, and entry, you're going to know when it's time to manage. You're going to know when it's time to pump the brakes. Good stuff. Great lessons, Pete. Thank you for those. Thank you for posting in this room and making everybody better. All the momentum. Let's see where we were. 72. 72. We're right about here. All the momentum. Tons of clear path. There's your pullback. That was your area inside of triggers. It never gets to the point where the market shouldn't go, and it finishes the move up to Fibonacci resistance, and that's the easy one. Pete says he entered at the pullback to the midband. Midband's on the wrong side of the triggers. Those 1-to-1s are right where you wanted to be. Great trade, great trend trade, great result. Everything we would expect to see with momentum and path more often than not. Nicely done, Pete. 15 minutes up, transition, pull back to the mid-band, closes above, will probably go higher than trouble. Why? So do you say it'll probably go higher than trouble because it did go higher than trouble? Because here at 53 is a boatload of trouble from the transition side that could have very easily stopped that market. That's an opinion. Guys, opinions are dangerous. They'll make you hold longer than you should. Trend is down. Strong side. Market's going down. Pull back to the triggers. I guess that's one of Wayne's rules. Jump the fudge in on the way down with momentum. Now it sounds like a trade. Buyers fail. Momentum is down. Jump the fudge in and see if they hit that next area. And sure enough, they did. More often than they don't, right, Wayne? Triggers down. No room. You're kind of jumping in on the backside. Market comes down. Market pulls back. Don't have momentum. Don't have a clear path. You jump the fudge in and hope it goes lower. And I hope it did. I'm rooting for you on that one. But you do not have a clear path. That area has already stopped the market cold once. What did it do? Wayne, did that one work? Did it go to your target? Set stop below. Oh, did you go long? No, you went short. Set stop below 1-to-1s, the right direction with trend. I'll just assume that it worked. You did have room to trouble. It did. Nice. Those 1-to-1s. Let me point out one of the things that Wayne does. And guys, this isn't a trend trade. It's not even a momentum trade. But there's a bar pattern that Wayne recognizes that seems to pay a lot of dividends. When everything says down, Wayne waits for a fight. And when the fight fails, Wayne jumps in to resume with the trend that's already established and the large chart momentum and direction. And I think that this fight, Wayne, is what a lot of people skip. Letting the buyers try and fail and then looking to take advantage because the large chart said it's more likely to go down. Nicely done, Wayne. Sometimes it takes me a second to dissect on minute bars. Because let's be honest, minute bars are a minute long and it's hard to read. Triggers are down. Strong side of the triggers. Once the small triggers roll against you, the market pulls up. You get in at the HVA. Oh, you had it set for the momentum trade and it turns into the trend trade. And you just take the trend trade down. Beautiful. Price didn't fill. Those sons of guns. Trailing stop behind trouble. Nicely done. Great trading, Wayne. Stopped out for 250 plus. So let's see what happened. This is gold. Is this you again, Wayne? That's the same one where it didn't fill and it got your stop. All right. Yeah, okay. I just making sure because the annotation looks different. It threw me off. Didn't fill, and Wayne said everything is still perfect. I'll protect my investment. And then they did come get you. And man, that happens sometimes. And I think it happens with gold in the evenings. I channeled my inner Wayne last night and traded gold. And it was outstanding, Wayne. I think I made $1,300 on a 2-lot in gold last night. I mean, everything was doing everything it should. I've had the opposite results, but I was just a little bit bored. At night, it's the one, huh? All right, so remember when I said if you go back and you analyze your trades every morning, and Wayne does it even before the morning, you'll see your thing. Counter trade after large push, loss. Counter trend, loss. Counter trend, loss. So Wayne woke up this morning and he said something like, shoot, dang it all, heck, counter trend seems to eat my profits. And he may still take them, right? And we may go back and look at your counter trend trades, right? Wayne didn't show me one loser today. Wayne, you got to take this one on the chin. Wayne said, I don't have to show Mark the losers. It doesn't matter. I've got it figured out because I'm good at analyzing. And I believe that Wayne is. But if you're not good at analyzing what went wrong, guys, post it in the room. And Wayne, there may have even been a super simple way for you to grab hold of those or to avoid those. And man, if you're interested in the counter trend, and I take counter trend, I dropped this earlier. There's the checklist for it that'll help you have the best. Just trying something new out. Right on. Jerry, how do you make sure all your positions are closed on Nexgen Pro Trader? Your internet died and went to your cell phone to see if I could make sure your positions are closed. I don't have any positions open right now, but let me see. Copier, payout history, reserve. I don't know if it'll give you close all positions from here. My trading accounts. I've got one account. Sure thing, Adam. Jerry, do me a favor. Put a ticket in to ask, or if John Novak, if you're listening, or Chris Novak has the answer. I don't do a lot of trading on the Nexgen Pro Trader funding. Guys, look at this. There's that divergence lesson again. I don't want to give you the wrong answer. Don't want to give you the wrong answer. You may need to call the AMP desk, to be honest with you, but I'm not sure. Let me do this. I'm going to take your message, Jerry, and I'm going to post it in my little and see if I can get someone to slide over and answer that question for you as well. All right. Let's see what we have here. Little crude oil base hit, strong top, odds favorable momentum, in below trouble, half off, out with the minimum. You're welcome. Jerry, we will get you the answer, I promise. Pete, great trade. Same thing, right? Momentum, room to trouble, strong triggers, cleared the trouble area, set the limit order at the trouble area, set the stop loss below, profit target at recent high, trade stopped out before reaching the recent high. Cool. Is this you, Papa? I'm going to give you the coolest lesson I can ever give. This area isn't broken yet because that bar didn't break away from it. Does that make sense? This area is broken because you got that full body above it, and check that out. That's where your momentum trade happened. That was the perfect spot. And it's this cool little thing, and let me find it real quick. We're going to turn it into another lesson here real quick. Boom, boom, boom. I've got slideshows and pictures for everything. That's how I learn. So check it out, Papa. Price reaches resistance. This area remains resistance, 100%. until I get the full body of a bar that breaks above it. And it's at that point that it becomes support. And you can see how it behaves as support. And then the market continues. And when it comes back, it's still support, full body closes away. Now it becomes resistance. Does that make sense? And I'll give you guys this look. There's the PowerPoint that I'm looking at right now. So here, it's still support without that full bar below. And sure enough, the market bounces up. And here, it's still resistance. And sure enough, the market bounces down. This is what I call the prairie dog look. If you don't get a full bar away from that area, it's just not broken, which means that it's still resistance the whole time, which means that it's more likely to stop that market from going up. And that's exactly what it did. That area didn't quite break, but the one below it did. And that's where that great looking momentum trade happened. Did that make sense, Papa? It's an awesome look. Large chart's perfect. Even the small chart supports it. And that one little thing says, okay, not this area. Let me do it at this area, and then I'll put my stop below that area of support. Good stuff. That's a good lesson. It's subtle, but it changes the whole dynamic of that trade. Awesome, awesome stuff. This is my favorite stuff, guys. You guys post in the room, and I say, oh my gosh, everybody and their grandmother does the same thing. Let's turn it into a lesson. That is a momentum style trade, Papa. Bum, 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 bum. And a momentum style trade is just that. Everything is screaming down, and then the market pulls back to the area that was already broken. And then because of the momentum, we're anticipating the market to continue down. So that's a momentum style trade. And there is a checklist on the KISS plan for that. Ninja Trader 8. And Adam, was it you that asked me for my NASDAQ workspace? Okay. I was like, I thought I saw that. There it is. All right, Miss Estefania. It's my favorite name to say. Strong trend, no terminations. And Estefania says, I triple dog dare somebody to try to stop this market. So she just jumps in, makes some money, gets stopped out, jumps back in, makes some money, gets stopped out. I love it. Even though, so Estefania, are you with me? Even though my stop was in the marker, at the reversal bar marker, that's okay. What did that tell you? That one down bar, Estefania, where your stop was, that could have happened as well, right? That's a beautiful stop. Because you're saying the momentum is dying out. The market could go down. The market is dying out. It could go down. I love it. So instead of even though, I got stopped out because of that reversal bar. I think it's brilliant. I think you did it perfect. And so Estefania, what's the other side of that? You get an up bar, you're right back in the game, right? Sellers failed with that large chart look. There's no reason you can't get back in. Let it go down, then find its way back up. Great trade. Really nicely done. You love those momentum trades. They treat you well, too. All right, Papa Grigio. Oh, we saw that one. That was the second one. I think you posted the same one twice. Let me double check. So there is the first one, which is that one. Let me scroll down, 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 down. There is the second one. Nope, there we go. Okay, cool. I gotcha. Waited for the triggers to clear trouble. So the triggers clearing, Papa, is Ninja Trader. Does that make sense? Triggers define the trend on the large chart. You've got nothing in the way. That's the trading view look. The triggers clearing, that's for Ninja Trader. You've put the two platforms together. Price breaks away. Strong triggers, you enter on the pullback. Out at trouble. Papa, this is the perfect momentum trade. Let me just even read what you said. I'm looking at it, I'm like, high five. This is the best looking trade. Small chart cleared trouble, waited for a pullback to support, set limit order. Set stop loss below support area, set profit target at 1-to-1. Limit order was delayed, ended up with 2 trades on accident, but won both. Lost this same trade earlier. Now, Papa Grigio didn't break away, broke away. So let me ask you, was it the same trade? Nope. Do you see the difference? Guys, this is why this classroom works. Because if you believe that is the same setup, we need just that little bit of coaching to show you why it isn't. And Papa, thank you for doing that. And most importantly, thank you for typing that on your chart, because that is one of the greatest lessons ever. That's what changes everything about what we do. It's that feedback. And not that I'm some badass giving you the keys to the kingdom, but when I'm sitting here and I don't have the pressure of wins or losses, sure thing, Paul. Oh, let me get back to the other one. Hold on. All right, so here was his first trade, Paul. Everything is up. Room to trouble. And he says that price breaks away, and he bought the pullback to support. Do you see it? And he got stopped out. Now, Paul, the challenge with this is that he didn't buy the pullback to support. He bought the pullback to the area that is still behaving as resistance. Because in order for resistance to become support, I need a full bar away. I need a bar that breaks above and away and then pulls back. And if you look at it, Paul, that was the area that broke. That was the momentum trade. There's the full bar above. Does that make sense? Let me know that lesson makes sense. Until you get a full bar away, this is still resistance. Does that make sense, Paul? And that goes back to that PowerPoint that I just dropped in the room about the prairie dog. Okay, so let's make it make sense, because that's what I do. Here we go. Whoops. It didn't. That was the whole point, Paul. Is on that one, it didn't break away. It never broke away. It was just resistance. Look at his second trade. There's the full bar that breaks away. Then it pulls back. Resistance became support because of that bar. So he thought he took the exact same trade. Doesn't break away, not support. Does break away, is support. Breaks above, resistance becomes support. Breaks below, resistance becomes support. So Paul, what we're looking for is the full body of a bar clearing the trouble. And until it does, it's just a prairie dog. This area is not broken. No matter how much momentum you have, it is still behaving as support. This area is not broken. No matter how much momentum you have, it is still behaving as resistance. And if you take that trade that just breaks above, that just breaks below, you're hoping that an area is breaking. Does that clear it up? Good question, man. Thank you. Telling you guys, you just got to have the courage to ask. All right, Sergio, this is you, right? Oh, you're welcome, Paul. You have momentum, absolutely nowhere to go, right? Total termination. Amen, John. No divergence, strong triggers, low risk entry. First target at trouble, second target, manage well. Does everybody see that Sergio traded directly into a brick wall of resistance that was defined as a termination condition? Should we chastise him? Should we point our fingers at him? No, because Sergio said, a lot of trouble, need to manage well. Sergio says, I choose to take this trade because of the momentum, because of the low risk, but my management hat is on in case things go south. Sergio, this is the most beautiful example of take and manage. Rule number 2 is nowhere to be found. Rule number 1 gave you the opportunity to take it. Manage it assertively. Great trade, Sergio. Nicely done. And guys, this is my hope for all of you. Not that you just only take high probability trend trades. That's not realistic. Is that you look at the advantages in play, that you say, this one is missing. I'm going to have to manage it. I'm going to have to manage it aggressively, assertively. I don't have a clear path. My momentum is missing. This isn't the best entry area. Let me figure out a way to manage my risk. And Sergio, you did it like a freaking surgeon. Nicely done. I love it. Adam P. Wayne's got one. Wayne, it's weird that I see you hanging out this late, still making money. I love it. All right, here we go. Momentum, but it is a 50-50. One divergence. You take the entry directly into the area of support, and sure enough, big ugly bounce. Ugh, that's a lot to sit through, isn't it? But nothing changed, right, Adam? Nothing changed. It was still momentum. It was still the potential to break. It was still a strong top. Getting in at the mid-band definitely reduces risk. Yeah, Adam, one of the things that I've, and this is just me talking about the way I trade the NASDAQ. You're not obligated. This isn't me giving trading advice. If I'm waiting for a reversal bar, my hard and fast rule that has kept me out of a lot of pain, and it's also kept me out of some winners, I'm not going to lie. My hard and fast rule is that if my reversal bar finishes directly into the fib or without room to get to the fib, I just sit on my hands. I just wait. Now, if it finishes 10 ticks below, it helps a lot. Well, and then let's go into that next lesson, right, John Novak? Adam, when you got to the mid-band, your small triggers were a full bar away. That is my get in at the area if I'm looking to trade areas, because when it gets to those small triggers up and against you, it gives you time to manage. And then when it comes back up higher, that close on the weak side of the triggers makes it a little easier. Does that all make sense? If at the edge of things to go short, it's okay, but not at the weak retracement areas. And that would be the edge of things that he's talking about. But that's one of the things that I've incorporated, Adam, is if my reversal bar puts me into a fib, into one-to-ones, into anything that could create a bounce, then I just don't, I sit on my hands and I either wait for a better entry or I'm willing to miss the move. But perfect large chart. And there was never any reason to change. Everything still said it was likely to go down. A lot of risk, though. I agree on that. Good stuff. All right. This is gold. Is this you, Wayne? Trading a little Ninja Trader? I love it. All the momentum. Clears trouble. And that's the chili dog. And guys, this is Wayne saying with momentum and path on both charts, I'm just going to jump the fudge in, right? And now, if the large chart has odds favorable momentum on a clear path, doesn't it make sense that a pullback to an area inside of triggers is the perfect entry for a high probability trend trade? Wayne knows that. Wayne says before he ever enters this trade, if this trade fails because of my large chart, it's probably going to turn into that one that has a 70 to 80% chance of winning. And Wayne doesn't panic. Wayne says, shit, let's put more contracts on. Wayne, that's awesome. That's awesome. Anytime John starts with sorry, it makes me nervous. Papa, should all of our entries for each trade occur after a pullback? Everything that I teach has a pullback. It doesn't mean that everything you do has to, but everything that I teach has a pullback. Everything that I teach has that fight, Papa, because one thing that I know, pretty much gospel truth, is that the market fights. And everything I teach teaches you how to recognize and capitalize on that fight. What Wayne did here is he said, with all this momentum and nothing in the way, I'm just going to jump in and see if they skip the fight. And they didn't. And he just let it turn into a beautiful trend trade. And then everything is still going up. And Wayne says, let me get them above resistance, and I'll catch them when it turns into support, and I'll take a momentum style trade. And then until they give me a reason, I'm going to hold for more money. Nice. It takes time, doesn't it, Justin? It's hard to trust a pullback. And then Phil, do we base strong weak transition on where the price is relative to the small triggers at the point of entry or at some other time? That's a good question. Where is the most current price? Where is the now price in relationship to the triggers? Great question, Phil. And there it is right there. And I agree, the pullback gives you better profit potential. The market trick is no pullback makes you think you should have jumped in and did it wrong. Absolutely. Absolutely. I've got a picture for you, Justin, that I'm going to show you. Let me get through the rest of these pictures. So right here, strong side. Phil, does that make sense? What's up, 10K? Let me see where this one happened. 1042. Odds favorable, 2 triggers, no divergence, pull back to the area inside of triggers. Market never goes where the market shouldn't. All that momentum takes you to trouble. It's the perfect trend trade. It's the perfect trend trade, 10K. Well, the perfect medium probability. 50-50. Your stop is perfect where the market shouldn't go because it could retrace to those large triggers, and just your profit target makes all the sense in the world. Beautiful, perfect, textbook. All right, let's see what John Novak says. Let's not forget this is a term even if it nips through it. Well, 2 triggers through. I will see your picture and counter you a picture. As taught in this room each and every day, no triggers, absolutely no trade. 2 triggers through is in fact the potential to break, but not your best look. And I stress that every day, not your best look. 3 triggers is when things are more likely to give you that breakout. 4 triggers is the golden goose. So John's not wrong. It's only the potential to break. Divergence is one of the biggest killers of that potential, right? So good lesson there, John Novak. You're missing the picture for 2 and 3. What should be the small chart? John, it's just a large chart termination. This is the challenge with John Novak, is John Novak wants every picture to be a complete trade. John, the picture that I posted is nothing more than using a tool to understand whether it's a term, potential, better potential, or clear. That's it. Has nothing to do with the small chart. This is not an entry. This is not rules-based trade. This is just how can I use the triggers to define the potential of that area to break. This is your lesson. This is your lesson. Just trigger reading. And then John's right. You'll use your small chart based on what your large chart is telling you. Exhibit A, using the ideas of divergences, right? Coming in and saying it's only the potential because of 3 triggers. Now I can use those divergences to show me that I'm losing momentum, that they're more likely to push up. So the initial lesson is let's just define it as potential so that we know we need more information to enhance our chances of success. And until you can do that on the fly in the moment, segue. There is the best way that we could ever come up with to take that potential to break trade, right on the KISS plan, even all the way down on how to manage it. But I do like your picture, John. I do like your picture. There's nothing worse than feeling like you have a counter thought to the guy that wrote the software. But he made me a pretty good chart reader. All right, Aaron. Strong momentum. Is it a clear path, Aaron? So can we go back to that picture? And I'm not sure exactly what we're talking about. 82. Aaron, do you see the Fibonacci resistance? Do you see how every trigger is below it? Not at all a clear path yet. And even at 85, it's the potential to break with 2 triggers. Aaron, does that make sense? I just want to make sure. Your large chart is the potential, and you're waiting to clear the bouncy stuff on the small chart and ride the momentum that the large chart produced. It's a chili dog, and it's a well-done chili dog. Everything says down. Thought it was going to bounce off the mid-band. I guess I ignored the divergence. All right. Best lesson I ever learned, Aaron. Are you ready? You will never make this mistake again. If you learn, that I stink at clicking, if you learn this phrase right here, I'll use a limit order to buy or sell a pullback at an area inside of triggers. Have you guys heard that before? Now, Aaron, here's your triggers. There's your area. you are actually on the wrong side of the triggers. That's your first red flag. How can I define where the market shouldn't go if I'm already where the market shouldn't go? And then the second part is that second higher divergence was the GTFO signal. So good management. But once you get to the wrong side of the triggers, man, it's a GIF. You're hoping, you're wishing, and that's a pretty avoidable mistake. I think your trade, the way you take it, was right here. And then you wait for the trend trade and you get burned, and that's probably why you prefer the momentum trades. Went all the way down here. Don't trust yourself a lot. Put your stop way tight instead of letting it run. So your short entry at 81 was directly into something that could create a bounce. Aaron, are you with me? Your short entry was directly into a line. Lines can create bounces. If you're going to jump the fudge in, get to the good side of anything that could create a bounce so there's nothing in the way to create the bounce. Does that make sense, Aaron? I love it when you guys post and don't answer because I'm giving you everything. Cool. Let's do it. And now here we go. Momentum, path, pull back to the area inside of triggers at 52. You caught it on the way down. I love it. You wait for the reversal bar. Beautiful. And out at trouble. Awesome. Aaron, that's a good trend trade. I took the same one live in class and we actually lost it because I got in on the way up and then they went to where the market shouldn't go. And I was like, dang it, I lost this trade. And Aaron said, wait a minute, the large chart's perfect. I'll catch it with a reversal bar and make the money that Mark lost. Nicely done, Aaron. Great trading. So the biggest lesson, if you're going to jump in, don't jump into something that can create a bounce because that's probably going to create a bounce. Once you get to the wrong side of the triggers, you don't know if, when, where, or what. And Aaron, that's where you could try the reversal bar. But second divergence becomes management. Great pictures, man. Great postings there. Thank you for that. All right, Miss Trina. Oh, hey, Trina, before we do yours, Justin, I want to show you something. Guys, one of the things that I like to do is remind you that you're human. And this is actually missing one of the entries, Justin. So, and Justin, you've transitioned over to TradingView, so it's a different thing. A lot of us jump in as brand new users, afraid the market's going to go without us. And then a lot of us get head faked on that smaller chart. And eventually we get to where we take the perfect entry, where we get to the point to where we're like, man, this is cool. That's the area. That's where my stop goes. And you've got to work through these to learn to trust this one. And even more importantly, guys, you've got to see the perfect trend trades work 100 times before you can buy the bottom tick right at the area inside of triggers. So guys, if you're working through trust issues, it's okay. Everybody works through trust issues. It's just what we do. Trina, your large chart, it just looks flatlined to me. And I don't know if it's the way you have it spaced or squished. That is the most unconfidence inspiring flat chart I've ever seen. But let's see. The triggers are up. You do have room to trouble. It did pull back to an area. Oh no, you went short? Those look uppish, not downish. Maybe they were downish on the pullback. So it pulls back to resistance. You get in on the good side of triggers. And there it is. And Trina, a lot happens over 15 minutes. They could have very well been down when you took the trade, but because it's a little historical, it could be. So I believe you. I'm not calling you out on this. They probably were down, right? And there's your pullback, and there's your close below, and there's you being smart, getting paid, and saying, if it is down, it's strong side, transition, I'm going to protect my investment. And if it doesn't work, It doesn't work. I don't lose anything. But from 33 to 29, easy 80 bucks. Nice job. I don't think personally, and this is just me, I don't think the NASDAQ gives a lot of opportunity in the evenings the way we'd like it to. On a rare occasion, it does. Gold is where it seems to happen. Triggers down, strong side, not an area. So Trina, your outer band is not an area for entry. If you choose to enter at the outer band, you're hoping that it holds, and it does from time to time. Just know that it's not on the list. It's not on the list of areas. You made a decision here. You get in with the close below, and you made some money. Nice job. Out before you could split targets. It's hard to be pissed off in an $800 trade because it moved too fast for you to move your targets. Nicely done, Trina. Triggers are up, strong side. You're above trouble. The market pulls back, gives you a close above, and you're out at your target. Nicely done. In a little late, make a little money. Nicely done again. Gold is super fast. I've never really, it can be. I traded gold last night. It was gangbusters. I loved it. Same thing. Flat to down. Strong triggers. Jump the fudge in and hope for the best, right, Trina? Jump the fudge in and hope for the best. Well, it made it. Was the 30 bucks worth it? Wayne's entry is right here, though. Wayne's entry is everything's in control. The buyers try, and when they fail, Wayne's in at 55.5. And he can probably verify that for you because he waits for the failure, and then he'll literally get in on the way down. Does that make sense? I believe that's Wayne's look. He was coaching you on that one? I think he forgot his rules. I could probably go find one of his trades that has him in right there. You would have been in, except it was against the trend? Right on. Well, why didn't you give her that coaching? But Wayne, is that right? That's how you take this style trade. You let it fail and then catch it on the way down, right? You guys know I learned from you too, right? She was in before she asked you? Right on. All right. You guys stories aren't lining up. Nice job, Trina. Great job not hoping for a home run. Adam, the pink 1-to-1s on the ES, is that a termination? What is the difference between the yellow and pink? And then Adam, there's your answers. Even with pictures, pink 1-to-1s are small swing 1-to-1s. Always the man's fault. We know that. Yellow 1-to-1s are large swings. On the S&P, Adam, the yellow ones are more profound. I typically ignore the pink ones on the S&P or crude oil. On NASDAQ, I give them all the weight in the world on the large chart. Pink 1-to-1s are not a part of the list for entries. It's mid-bands, fibs, yellow 1-to-1s. And then John says, for marks 2 to 3 triggers through sheet, a medium probability trade is defined as when most indicators line up for a trade. However, a small issue exists. It can be on your small or large chart, but there may be sufficient odds and momentum for you to take this trade. This will be the vast majority of your trades. When executing medium probability trades, you will take these trades and manage them assertively. If there's trouble in your way, you may take a portion of the position off at that trouble spot, reduce risk. For those who learn to take and manage high and medium probability trades will see much more profit than those who are only looking for the perfect 1-to-1. Not a bad thing, but that you are out to maximize your time, effort, and money. Amen. Gosh. I should say this stuff, John. I should take a minute every now and then and remind people that when everything is great, it's a high probability. And when one of your advantages goes away, large or small chart, puts you into a medium probability trade where you may need to manage assertively and get to a zero loss level. And if it's low probability, it's going to be even more difficult. I love it when John bumps into the room because what you'll find is that our language is exactly the same. If nothing else, we are consistent. He mutes the room and then he jumps in when he sees an opportunity because he's always teaching. Absolutely, Papa. The logic does apply. So this was the one that I was trying to do for TradingView. When you define direction, clear path in your entry area, you've got the best of the best. Man, I need it like 55 times, John. So let's say hypothetically, and I would hope if you're taking a trend trade, Papa, the direction doesn't go away. But maybe your path isn't completely clear, but you can define the direction with the trend. You've got the perfect entry. You may choose to take and manage that trade into trouble. But now it's medium probability. Now, because you know that you don't have that clear path, you're more inclined to manage a bit more assertively, to look for change on the 1 minute, to not just hope it runs forever. And then maybe you only have an entry area. It's low probability. Maybe you're only trading with the direction, right? So yeah, the logic is the same. If I look at my TradingView chart right now, my triggers are up. I have room to trouble. Let me get over to the most current bar. My goodness. Well, shoot, now I'm pulling back to a mid band and would need a close on the correct side. But let's say hypothetically there's a zone right here. It would be my right, Papa, to say, you know what? I choose to trade into this zone because we're in a strong trading market. We're outside of the outer bands. Everything says up. I've got one flaw in the slaw, so to say. So maybe I make the decision to trade into it and then just manage assertively if things don't go my way. Does that make sense? But if you always go back to the basic, the core concepts of whichever platform you're using, you know when there's something against you. You know when there's trouble there, and that's got to instantly put your management hat on. Good stuff. Adam P. Triggers are inside. 4 triggers through. No area inside of triggers. Not pink 1-to-1's termination, Adam. So let's do it again. Let's go back and just beat this concept into everybody's head today. So Adam, did you have momentum? Smalls inside of the large. What do you think? No. Did you have a clear path? Absolutely. 100%. 4 triggers through. That's the recipe. We're going to highlight clear path. Did you have an area inside of triggers? You most certainly did. Take, it's medium probability, and manage. I love it. Everything that we just talked about. When you understand that something is missing, it gets your management hat on, and you did a perfect job of it. Absolutely perfect, Adam. I can find nothing wrong with this picture. You get in, you get paid, you protect yourself because it's only medium probability. That is like the perfect picture for everything that we just talked about. Thank you for that. And down here, you had momentum. You had the potential to break. It pulls back to the area inside of triggers. It doesn't go where the market shouldn't, and you got paid. I don't know if you shared that one, but that's a really nice one too. Wayne's momentum entry is to go through the zone and halfway through open area, then wait for fight back to zone, then buy, sell 3 to 4 ticks outside of zone, the direction you're going. Isn't that what I said, Trina? Wait for the fight, catch it on the way down? No? Oh, well, it's a good thing I'm not trading Wayne's plan. Without a picture, I'm not exactly sure. That's a lot of words. And I translate every word in the English language into a picture. And there's a lot going on there. A lot going on there. I don't know what halfway through the open area is. That's okay. All right. So he gets below the zone. Hold on. Now, Trina, please bear in mind that I'm a man and I don't communicate well. Give me a little grace. So he gets, okay, so that one didn't get below the zone, but it did get below this zone. And then the fight, and then catch it on the way down. So this one got below the zone. There's the fight back to the zone. Catch it on the way down. So you forgot to let it get back to the fight at the zone, maybe? This just looked like jump the fudge in. I dig it. Brain to mouth filter is broken. Don't listen well. So we struggle as Novaks. Amen. I think I was on the right concept. I think we're saying the same thing. You're just saying it better. You're saying it better. When I see Wayne's charts, they do make sense to me now. Below market flow, HVA lines is the only thing helping here. Same spot that says short to zone okay. The short to the long, right? And then, John, can I turn it into trend trade rules? When the market is up, when you have room to trouble, the moment the small triggers turn against you, you've got to look for a lower area. And when you get to the lower area, your entry is a close on the correct side of the triggers. Now, what John has done is found a way to get down to that area. It's the short to the long. Nicely done. And there's nothing in the way, right? And there's odds favorable. And we've seen a lot of that today. Jump the fudge in and hope it makes it to the thing that'll create a bounce. That's pretty awesome though, isn't it? I love it. And guys, you're going to get to that point. If you study, if you practice, if you ask a million questions, if it's only one corner, it's not your trade, right, Phil? Looks like it kept you out of a loser. Nicely done. And now look at that 15-minute term, white bar, open above the HVA, close above the small triggers. Sure feels like a trend trade, doesn't it? And there it goes. Sure feels like a trend trade. Guys, if you can't get through this, you're going to struggle to find that. Breaks below, fights, catch it on the way down, right? This one just didn't break below. So since there was a fight, catch it on the way down isn't valid. Is that right? Rules not met? So this was just jumping the fudge in and hoping? Okay, but where's the fight? Where's the fight after the break? And then pull back two, and then catch it on the way down. There's the break below. The fight tries to start, but you're in before the bar's ever done. Which means you don't know if it's going to fight, and it didn't. It just went down right to trouble. And it's subtle, Trina. And you're learning new trades, right? And you're learning new trades. And you have been filling your plate with as many trades as you can latch onto lately. So I'm going to assume that you're in this long trade right now. Why are you frustrating yourself? Why are you doing this to yourself? One of the things that I've found, guys, is that you begin to get so hell-bent on finding every trade that you forget to take the easy ones. I have to take John Novak's counter trend trade, even if it's not from a termination condition. I saw a white bar and I have to take it. And you're like, F that trend trade because I've got to wait for it to get somewhere where I can counter. I know, I've been there, I've done it. I've done it. We all want to be in every move all the time, right? There you go, Wayne. That one's for you. That was the picture that I made this morning. We want everything. We want the champagne dousing, and we want the wreath around our neck, and we want the giant trophy, and we want the biggest balls in the room, right? Or the clackiest ovaries, whatever you want to call it. But we're brand new. Why are we trying to do what the people that are so much smarter than us are doing? And not that you're dumb, Trina. Not that I'm dumb. I can't do the stuff John Novak does, not effortlessly. He's 20 years ahead of me. But one of the things that we've done collectively as a company, John Novak's brilliance, is that he's given you one pattern that you can prove wins more than it loses. He's giving you one pattern that could create the potential for more wealth than you've ever experienced. And we all circumvent the easy one because we want more, right? Because we want more. It's the dog looking into the water with a bone in its mouth, and it wants the bone so badly that it sees the other dog with that it barks at it and loses the bone. Do you guys remember that old fable? It is, isn't it, Trina? You ever gone out to a restaurant and ordered the fish, and then the asshole 2 tables over gets the steak? Do you order the steak because it looks better than your fish, or do you just eat your fish? I don't know. Bad analogies. No facts for bad analogies. So it's up to you. Enjoy your damn fish. That's going to be our safe word now when you start getting crazy. Enjoy your damn fish, Trina. But it's real, guys. There's a million ways to make money with the software. There are so many trades out there. There are so many entries and so many exits. And until you get really good at the best, why are you chasing more? And John says it, and he said it to me a million times. If you can't make money the easy way, why do you believe you're going to make it the hard way? If you can't catch the perfect trend trade, Boaz, this is gorgeous. What makes you think you're going to be able to go counter trend? If you can't remember 3 rules on 2 charts, what makes you believe you're gonna learn all the other rules and not mess them up? And I had to go through that as well. You counter trend traders, I've got 5 things on the checklist to take that trade. Most of us are struggling with 3. Mark, go over the one you just said. If you can't get through this, the mid band was in the way. Paul, I'm not sure what you were talking about. I'm sorry. Wayne was looking for the momentum trade, but it turned into the trend trade. And I think what happens, Wayne, thank you, Paul. I think one of the things that happens is we get so married to the trade we're looking for that we kind of we miss out on a lot of the really easy ones. For you, the lead is in exactly the same. The only difference is one of the triggers roll and the other does not. I like it. Having a plan, right, Wayne? Touch of triggers from wrong side. Took the money off here for the long. Nice 2 chart usage, John. It's still up, right? It's still room to trouble. Now it's a pullback to a mid band. And now we would need a close on the correct side of the triggers. John uses ways to get paid and just wait for the next one. I like that. I like that. Nicely done. Guys, trading doesn't really have to be difficult. Trading doesn't have to be stressful. The more you pile on your own plate, the more frustrating it becomes. One of the things that I've been saying in this room for years, and I'm just going to bring it up again because dead horse and all that good stuff. But this has been one of the gospel truths, and John, maybe you'll back me on this. You've been a part of this for almost 30 years. The further new users deviate from simple, the longer it takes them to become comfortable with the pattern recognition. The more that you look for, the less you seem to find initially, right? And then Wayne will appreciate this. So there was a book, Keith Code, Twist of the Wrist, and it was about motorcycle racing. And it had this analogy or metaphor or whatever you want to call it, that when you are brand new, and Wayne, if I butcher this, please forgive me. When you are brand new, you have about $10 worth of attention, right? When you're brand new, you have $10 worth of attention. So guys, when you're brand new with me, you're going to spend $3 defining the trend, and you're going to spend $4 wondering if you hit something, and you're going to spend another $3 trying to figure out your entry, and you're done. That's it. You've used up all 10, and you're exhausted, and now you have to manage it, right? Which is why we focus on the great entries, because eventually trend is free. It's second nature. Eventually path is free. It's second nature. Eventually your entry is free. It's second nature. And when you get to that point, now you take your $10 to the next trade, right? Now you take your $10 to the next trade. The trend trade has become easy. I missed my entry. The trend trade has become just effortless. So now maybe I'll look for that edge trade. Maybe I'll look for that edge trade. Maybe I'll look for that momentum style trade. Does that make sense, everybody? I don't tell you how to trade, but if you're not in this trend trade making money, the entry was 06. You're up $180 per contract right now. Boom, 14 points. 14 points to the first sign of trouble. If you talked yourself out of this trade, if you didn't catch this trade, if you don't understand this trade, why are you looking for more trades? Close above small triggers. Rule number 2 not met. Right, Paul? Rule number 2 not met. Now one-to-ones become support because of the break above. There's another close above. And there's nothing in the way. It's perfect. Area of support, close above, no room. Pulls back to an area of support, closes above. Nothing but room. Smooth sailing. Great picture, Paul. Guys, I know I sound like a broken record every now and then, but I promise you the broken record is a good one. The entries are solid. The methodology is proven over decades. No worries. I'll tell you what, Aaron, post it without the annotation. Let's annotate it together as a room. I'll save you some typing. You want to do that? And it just keeps going. So who's going to show me a picture of the perfect trend trade? Who took it? It hasn't even slowed down. And then Paul, if you weren't going to trade into the mid-band, they came back for you from the mid-band. Maybe not your money. That one definitely is. Well, okay, Aaron, we can't annotate it because you don't have entries or exits on here. Based on what I know about, you said you just took a big loser, right? Everything says up. Yeah, just give me your entries and exits. So, no, John, there's no reason to get out. You big sissy. Wayne, have a good one, man. Thanks for being here, bud. John, it's a great trade. Get what you ask for, don't bitch. Yeah, Novak men have no filter. None whatsoever. All right, price reaches midband. Large triggers a full bar away. That's a termination condition. I have a feeling this is our lesson, Aaron. Price reaches a midband. Shoulda, woulda, coulda. Right, Justin? So, Justin, your job is to take your picture, to annotate your picture, and write on your picture why you could have held that trade longer, and then go to the spreadsheet that I'm sure you are using, and over here, use this for a management lesson. And when you look at it tomorrow morning, you're going to be more prepared to manage that trade. But if you just post in the room, damn, I should have held, that's probably not going to come back to you tomorrow. If every entry is based on rules and looks of indicators, shouldn't the exits be the similar? 100%, John Novak. It should be mechanical and thoughtless every time. I firmly believe that. And if your exit condition was met, you have to exit. Otherwise, you're not trading your plan. You're trading your emotions. Oh, sorry. Perfect long. Mark's golden goose trade. Maybe not perfect. Trend is losing. No, the trend is not losing momentum. You're just on the weak side of the triggers, Justin. Large charts up. Pull back to the 1-to-1s. Flip. Take an entry. Manage well with a tight stop. Take what it gives me and take profit. All right, so let's do this. Are you ready? After entry, what changed? This helped me a lot, Justin. I hope this helps you. So after the entry, my small triggers were vertical. That's better. My large triggers rolled up. Now I have odds favorable momentum. Nothing in the way anywhere. Does this sound like an exit? Not at all, right, Justin? Now that you come back to it and you're not in the trade, you're like, holy shnikes, why did I exit that trade? So Justin, go through this. When you take a trade, when you say things like, takes what it gives you, it gave you so much more. You just didn't accept it. Does that make sense? So one of the things that I do when I take a trade is I ask myself, what's changed? What's different? I still have all the advantages that got me in. There's still absolutely nothing in the way. And the only thing that's changed is my trigger lines keep getting better and better. They keep pushing that market up. Nothing. Still nothing has changed. Pretty cool, right? So trading and management, like John Novak said, can be very mechanical. The same way you have a reason for an exit, you have to have a reason for entry. You have to have a reason for exit. If your plan says, I'll get out at trouble, well, then that's your exit, and whatever happens next isn't yours. If your plan says take partials at the HVA and hold the next one until there's a large chart area, well, then you've got nothing to do until that next condition is met. It's all those fluctuations in the middle, Justin, that kill us, which is why having a plan for entry and exit is so stinking important. Does that make sense? So ask yourself, what changed? What's different? What's not working for me the way it was? So pop-up, you take the first long, you get paid at trouble. I like it. I know, and I totally get that. So Justin, if the small trigger is rolling down, is your exit condition exit the trade, right? Does it need to be? If the large chart looks like this, so make sure that you get those. And then you get stopped out of your second trade, and then Papa, you re-enter and you get out. That's perfect. Move stop to break even too soon. That happens. Perfect trend trade though. And Papa, are you with me? There's one important thing here. That close on the correct side of the triggers, that's your entry. Here, you're trying to trade the area, not the close on the weak side. And look what it did. It came and got you. No, not at all. Your trend trade rules, and Aaron, I got you, don't worry. Your trend trade rules are super specific. It's a pullback to an area, but the entry is the close on the weak side of the triggers. So again, Papa, we're mixing NinjaTrader and TradingView. NinjaTrader, I'll just go ahead and pull up that picture too. NinjaTrader says, classroom, let me find a good picture. NinjaTrader says you'll buy the pullback at the area inside of triggers. TradingView says you'll wait for the pullback to the area, but enter on the weak side of the triggers, to above the triggers for a long, below the triggers for a short. Does that make sense? Yep. So that one little thing keeps you patient and gives you the perfect entry, and you don't have to give up that $100. And again, I'm going to say it again, guys, and I've been saying it all day. This is why this room works. Because if you have the courage to post in the room, we'll see the little things, right? The little things that you didn't see in the moment. We'll identify the small misunderstandings that you have in the rules, and then I'll give you a fix. All right. You went short, right? Yeah, I knew it, Aaron. Easiest fix ever, brother. You ready? Oh, let me read what you wrote. Entry was at 88.5, got out at 92.5, so I thought that it was going to bounce off of the 1-to-1 with the large chart having been in a downward trend. Didn't know at the moment the mid-band was a term or not, but it hit me hard. I could have gotten out earlier, but I guess I keep hoping for it to reverse and come back down. It just kept going up. Yep, that happens. So 100% into a termination. And not only are you into a termination, Aaron, these only have the potential to break. So you have potential, straight up termination. And you're from a weak top. This market's probably going up. This is not the look for a chili dog. Not at all. Um, and then yeah, there's a lot of hope, and you let it pull back to the areas, and you gave it the best chance for the spot where if it was going to go down, it is going to go down, but it didn't. And those factors, the first one, I think the most important one, is that gap theory. Because if nothing else, I expect it to get all the way up here. Does that make sense? When I saw the picture, I was already into dollars to donuts mode. Do you know that phrase? The midband is a termination if the large triggers are a full bar away? Write it down. That's one of the most forgotten ones. The midband is always a termination if the large triggers are a full bar away. So it's no different than taking the short directly into that blue fib. And there it is again. Look how it pulls back to the large triggers. Pretty cool, right? So it gives you something to think about when you're taking these trades. Good stuff. Absolutely not. So Estefania, this is a pullback to an area inside of triggers with the potential to break. It's just a trend trade. This was the gap theory. Price reaches an area, room for a full bar to come back. So Estefania, a full bar down is on the opposite side of everything. If you look at in the spreadsheet here, if you feel like studying that concept, there are so many pictures of the gap theory. Price reaches the mid band. Large triggers are a full bar away. There's like 30 pictures of the gap theory in here. Price reaches the mid band. Large triggers are a full bar away. So it's a very distinct look. What's happening on the ES right now is actually looks like it's just kind of setting up a trend trade. Momentum, 3 triggers through, pull back to the area inside of triggers, and that's exactly where it bounced. That's just a trend trade. Good stuff. Good class today, guys. Nice.